Thinking about retiring in Lakewood Ranch, Florida? Most buyers start with one question: what can I buy? But the real question is, what will it actually cost me every month to live here? Because in Lakewood Ranch, the price of the home is only part of the story. You have HOA fees, CDD fees, property taxes, insurance, electric bills, water, maintenance, closing costs, lifestyle expenses, and the cost of choosing the wrong community. So in this video, I want to break down from a realtor's perspective, not to scare you, but to help you make a smarter decision before you buy. I'm George Latos with Zackos Realty, and I live and work here in Lakewood Ranch. I help buyers understand not just the house, but the lifestyle and the real cost of ownership. If you're thinking about retiring in Lakewood Ranch, Sarasota, or anywhere in Manatee County, make sure you subscribe to the channel. I'm building this channel to help buyers understand the real numbers, the communities, the lifestyle, and the mistakes to avoid before making a move to Florida. So let's start with the first thing buyers usually focus on: the price of the home. When buyers think about retiring in Lakewood Ranch, they usually focus on the purchase price. And yes, that matters. You can find homes in and around Lakewood Ranch from the 400s, 500s, 600s and up. And of course, luxury homes can start well over $1 million, $2 million, and go far beyond that. But for retirement buyers, especially buyers coming from New York, New Jersey, California, Illinois, or the Northeast, the bigger question is usually monthly comfort. You may be downsizing. You may be paying cash. You may be trying to protect your retirement income. So the question becomes, after I buy the home, what am I committed to every month? That's where the buyers need to slow down. Because in Lakewood Ranch, you're not just buying a house. You're often buying into a lifestyle, a community, and a long-term cost structure. Let's start with HOA fees. The HOA fees in Lakewood Ranch can vary a lot depending on the community, the amenities, the level of maintenance included, and whether you're buying in a lifestyle community, golf community, 55-plus community, or a traditional neighborhood. As a general planning number, many Lakewood Ranch buyers should expect HOA fees somewhere in the range from $200 to $500 a month. Some communities may be lower, and some golf resort-style maintenance-included communities can be a lot higher. For example, in many 55-plus lifestyle communities, buyer may see an HOA fee in $350 to $450 range, but the number alone does not tell the whole story. The better question is, what does that HOA fee include? Does it include lawn care, irrigation, cable, internet, exterior maintenance, a clubhouse, a fitness center, lifestyle director, gateway entry, pool, pickleball, social events? And because $400 a month can include a lot of services, it may feel very different than $250 HOA that includes very little. And this is where retirement buyers need to be careful. The cheapest AOA is not always the best value. The best value is the community where monthly fees match the lifestyle you actually want to live. Now let's talk about one of the biggest surprises buyers moving to Florida find: CDD fees. CDD stands for Community Development District. In simple terms, a CDD is often used to help pay for community infrastructure. That may include roads, utilities, drainage, common areas, and other improvements that help create the community. The important thing for buyers to understand is this: CDD fees are separate from the HOA. They usually show up on your property tax bill, so many buyers do not think of them as a monthly expense. But from a retirement budgeting standpoint, I like to break them down monthly. A reasonable planning range for many Lakewood Ranch communities may be around $1,500 to $5,000 per year. That works out to about $125 to $416 a month. Some homes may have lower, some may have higher. It depends on the village, the home, the bond portion, and the operations and maintenance portions of the CDD. So here's a simple example. If your HOA fee is $400 per month and your CDD works out to $250 a month, your real community-related costs are not $400 a month. It's closer to $650 a month. That does not mean it's bad. It just means you need to know the number before you buy. Because buyers coming from other states may not be familiar with CDDs, and they can have a meaningful difference in your monthly retirement budget. Property taxes are another area where out-of-state buyers can get confused. Florida has no state income tax, and that's very attractive to many retirees, but that does not mean property taxes are irrelevant. The official property tax calculation is based on taxable value exemptions, millage rates, and location. It's not simply based on the sales price, but buyers usually want a simple planning number. So for the planning purposes in Lakewood Ranch, Sarasota, and Manatee County situations, I usually tell buyers estimating property taxes at roughly 1.1% to 1.5% of the purchase price. It's not exact, but it gives buyers a reasonable starting point. So if you buy a home for $700,000, your property tax estimate may be somewhere around $7,700 to $10,500 per year, or roughly $640 a month to $875 a month. But here's where buyers need to be very careful. The seller's current tax bill may not be your future tax bill. If the seller has owned the property for a long time, they have a much lower assessed value because of Homestead and Save Our Homes Act. When the property sells, the assessed value can reset. So when you're budgeting, don't look at what the seller is currently paying. You need to estimate. You may be paying higher after the purchase, and that's a big difference. And if the home has a CDD fee, that may also appear on the tax bill, which can make the total tax bill look higher. So the takeaway is simple. For planning, use roughly 1.1 to 1.5% of the purchase price per year, then verify the specific property before you make a final decision. Now let's talk about insurance. This is one of the most important parts of the conversation. Florida does not have a state income tax, but property insurance is very real, and insurance can vary dramatically depending on the home. The age of the home matters. The age of the roof matters. Wind mitigation matters. The location matters. The flood zone matters. The replacement cost matters. The insurance carrier matters. For planning purposes, many buyers should probably think in terms of $2,500 to $6,000 per year. That works out roughly to $200 to $500 per month. Some newer homes may be less expensive to insure, and some older homes closer to the water, homes with older roofs, or homes with certain risk factors may be more. This is why I always recommend getting insurance quotes early, not after you fall in love with the house, and not after the inspection. Early, because insurance can change the way you feel about the total monthly cost. And for retirement buyers, that matters because you want the home to fit in a budget after the excitement of buying wears off. Electric bills is another number buyers always ask about, especially when they're moving from colder states. In Florida, you're not usually worried about big winter heating bills, but you are thinking about air conditioning. For many newer homeowners, especially small villas or energy-efficient single-family homes, electric bills can be very reasonable. If you have a larger home, high ceilings, older HVAC system, a pool, electric vehicle, or you like to keep the house very cool, that number can add up. As a general planning range, I would tell buyers to think in terms of roughly $150 to $250 a month for electric. Some homes may be lower, and some larger homes with pools may be higher. And that is the key. Don't just ask what is the average electric bill in Florida. Ask, what is the electric bill for this type of home, this size, this HVAC system, this pool, this level of usage? That's a more useful question. Now you have water, sewer, trash, and sometimes irrigation. This number can vary depending on the home, household size, landscaping, irrigation setup, and some other services that are not included in HOA. For planning, I would generally tell buyers to think around $85 to $150 per month. And again, this can vary. If you have more landscaping, more irrigation, or a larger household, the number can be higher. If you're in a maintenance-included community where certain services are bundled into the HOA, the number may be different. The important thing is not to ignore these smaller numbers, because when you add them together, they become part of your real monthly ownership costs. As one more number retirement buyers need to think about before they buy. Closing costs. Now, this is not usually a monthly cost. This is a cash to close cost, but it still needs to be a part of your budget. For Florida buyers, a good planning range for buyer closing costs is often around 2% to 5% of the purchase price, plus your down payment. So if you're buying a $700,000 home, your closing cost estimate could be somewhere around $14,000 to $35,000, and that is before your down payment. If you're paying cash, your costs may be based on the lower end because you don't have lender fees, mortgage taxes, loan escrows, or loan-related charges. If you're financing, your costs may be higher because you may have lender fees, appraisal, credit report, prepaid interest, insurance escrows, tax escrows, mortgage documentary stamps, and other mortgage-related costs. So when a buyer says, I have enough for the down payment, my next question is, do you have enough for the closing costs, insurance, taxes, reserves, and the first few months of ownership? Because the budget is not just the purchase price. It's the down payment, the closing costs, the monthly costs, and the lifestyle costs. Now, let's put this together using a $700,000 home as an example. Now, this is just a planning example. Every property will be different, but this gives buyers a much better way to think about the numbers. One-time cash-to-cash close item, closing cost 2% to 5% of purchase price, $14,000 to $35,000, plus your down payment. Now let's look at an estimated monthly ownership costs. HOA, $300 to $450 a month. CDD, $150 to $300 per month. Property taxes using roughly 1.1% to 1.5% on a $700,000 purchase, $640 to $785 per month. Homeowners insurance, $200 to $500 a month. Electric, $150 to $250 a month. Sewer, water, trash, basic utilities, $85 to $110. So even before we talk about the mortgage payment, groceries, healthcare, dining, golf, entertainment, family visits, you're roughly looking at $1,575 to $2,500 a month in recurring ownership costs. And again, that doesn't mean Lakewood Ranch is unaffordable. It means buyers need to understand the full picture, because the goal is not to just buy a home, the goal is to retire comfortably. Now here's the part people do not always think about. When you move to Lakewood Ranch, you may actually spend more money on lifestyle. Not because things are bad, but because there's just more to do. You may go out to dinner more often. You may play more golf. You may join clubs. You may have family visiting. You may spend money on outdoor furniture, bikes, golf carts, fitness, boating, pickleball, travel, or entertainment. And honestly, that's a big part of why people move here. But it also needs to be a part of your plan, because retirement in Lakewood Ranch is not just about lowering expenses. For many people, it's about improving your quality of life. And improving your quality of life usually has a cost associated with it. The biggest mistake is buying a home without understanding what those fees are paying for. A $400, $500 monthly HOA may make perfect sense if you use the pool, fitness center, clubhouse, lawn care, social events, and lifestyle programming. But if you're not going to use those things, you may not want to be paying for a lifestyle that doesn't match the way you actually want to live. On the other hand, choosing the cheapest fee is not always the smartest decision. Sometimes a lower fee community means you're responsible for more maintenance yourself. You may be maintaining your own lawn. You may be replacing more things yourself, and you may have fewer amenities, and you may have less social connection. So the real question is not which community is cheapest. The real question is which community gives me the best lifestyle for the money I'm comfortable spending. And that's a very different conversation. Now, after going through all these numbers, I want to be clear about something. Lakewood Ranch may not always be the cheapest option in the area. There are communities around Bradenton, Parish, North River Ranch, Venice, Sarasota, Palmetto, and other parts of Manatee and Sarasota County where you may find a lower purchase price, lower fees, and a different cost structure. But cheaper is not always the same as better. Part of what people are paying for in Lakewood Ranch is the overall environment. You have a master planned community structure. You have parks, trails, shopping, restaurants, medical access, golf, sports facilities, clubs, social opportunities, and different villages designed around different lifestyle. You also have a community with strong name recognition, long-term demand, and a reputation that attracts buyers from all around the country. That matters. When you have all that thinking about retirement, because retirement is not just about finding the lowest cost house, it's about finding the place where your daily life feels easier, more connected, and more enjoyable. For some buyers, a less expensive may absolutely make sense. But for other buyers, the added cost of Lakewood Ranch might be worth it when it comes with convenience, lifestyle amenities, top-tier healthcare access, airport access, social connection, continued long-term growth, and the appeal of the community. So the question is not simply, can I find something cheaper? Of course you can. The better question is, what am I getting for the money, and does the value match the life I want to live? That is the real retirement question. So what does it really cost to live in Lakewood Ranch? The answer depends on the home, the community, the fees, the taxes, and the insurance, and the lifestyle you choose. But my advice is simple. Don't ask what the home cost. Ask what the lifestyle cost. Ask what the HOA includes. Ask what the CDD really means to you and the home you're buying. Ask what the tax bill may look like after purchase. Ask what the insurance may cost before you fall in love with the house. And just as important, ask what value you're getting in return, because yes, you may find less expensive options outside Lakewood Ranch. But if Lakewood Ranch gives you the lifestyle, convenience, community, healthcare access, airport access, activities, social connection, and long-term confidence you're looking for, then the conversation is not just about cost, it's about value. The right retirement move isn't always the cheapest. It's the move that fits your life, your budget, and your long-term comfort. If this video helped you better understand the real cost of retiring in Lakewood Ranch, make sure to subscribe to the channel, and I'll be covering more communities, more cost breakdowns, and more honest guidance for buyers who are thinking about moving to Florida. And if you're serious about considering Lakewood Ranch, Sarasota, or Manatee County, reach out. My job is to help you compare the options clearly so that you can make a smart move. I'm George Latos with Zackos Realty. Thanks for watching, and we'll see you in the next video.